What would Iran actually get from a deal with the US? Because if you look at some of the numbers being discussed, the potential economic prize sounds enormous. There is talk of Iran gaining access to tens of billions of dollars in frozen assets. There is potential sanctions relief that could increase Iran's oil revenues. Tehran also wants to generate revenue from ships passing through the Strait of Hormuz. And then there's perhaps the biggest number of all, a proposed reconstruction fund reportedly worth as much as $300 billion. Put all of that together, and it sounds like Iran could be heading for an extraordinary financial windfall. But you look more closely, and the reality is very different. Even in the best case scenario for Tehran, its realistic first-year proceeds from a deal that would probably top out at around maybe 30 to 40 billion. And even with that money come significant conditions. Some would be restricted, some requires US political approval, and much of it could potentially be taken away if relationship between the US and Iran deteriorate. So let's break this down of what a deal could actually be worth, where the money would come from, and whether it would be enough to make a meaningful difference to Iran's economy. So first, forget the enormous headline numbers. The first thing to understand is the difference between what Iran might demand and what it could realistically achieve. Iran's theoretical demands and potential benefits run into the hundreds of billions of dollars. But the analysis suggests the realistic first-year benefit is closer to 30 to 40 billion. That's still a lot of money, but consider what Iran has already lost. Iranian officials estimate the war has caused around $270 billion in damage. That figure should be treated cautiously because Tehran clearly has an incentive to maximize its estimates, particularly if compensation becomes part of negotiations. But even if the real figure is considerably lower, the economic damage is substantial. For comparison, the 12-day conflict with Israel last year in June 2025 was estimated to have caused between 25 to $35 billion in damage. And the IMF projects Iran's economy will contract by 6.1% this year. That's around $24 billion in lost GDP. So even the most favorable deal isn't going to make Iran economically whole, but it would provide some breathing room. It would not compensate Iran for the broader cost of the conflict. So where would the money actually come from? There are essentially three major sources. There's frozen assets, there's oil revenues, and then there is the Strait of Hormuz. So let's look at the first one. The first potential source is actually Iran's own money, its frozen assets. You've probably seen estimates suggesting Iran has around $100 billion in overseas assets. But that doesn't mean $100 billion is available as part of a deal. Iran has reportedly demanded access to around $24 billion, of which the analysis estimates maybe around $20 billion could potentially be secured. Now, these funds are spread across different countries. There's around $6 billion in Qatar, there's around $10 to $15 associated with Iraq, and the other Iranian assets are held in Oman, China, the UAE, India, and elsewhere. But here's the important part. Releasing frozen assets does not necessarily mean handing Iran unrestricted cash. The most likely model is the mechanism used in 2023. Now, under that arrangement, Iranian money was transferred into restricted accounts in Qatar and could largely be used only for approved humanitarian and other authorized imports. So when you hear that $20 billion could be released, that doesn't necessarily mean Tehran suddenly has $20 billion available to spend however it wants. And then there's an even bigger problem. The money could potentially be frozen again, and that's already happened. The 2023 asset release mechanism was subsequently reversed without requiring a new piece of legislation. There's also a timing issue. Under US law, An Iran nuclear agreement has to go before Congress, triggering a 60-day review period, during which certain funds cannot simply be released and sanctions cannot simply be lifted. And in the current geopolitical environment, 60 days is a very long time. The June Memorandum of Understanding itself was signed and collapsed within one such window. So, a deal could be announced, funds could theoretically be approved, fighting could resume, and the money might never actually move. That's why the distinction between the headline value and bankable value matters so much. Let's go to the second point, from where Iran could get its money. Its oil sanctions relief. This is a second potential source of its money. And over time, this could be even more important than a one-off release of frozen assets. Iran earned about $46 billion from oil in 2025, but because of sanctions, Iranian crude typically trades at a significant discount to the rest of the Arab Gulf. For a brief 15-day period in June, the US Treasury permitted Iranian oil purchases in dollars. The impact was immediate. The discount on Iranian crude narrowed from about $8 to $10 below Brent, which is the global benchmark, to just $2 to $3 per barrel. That gives us an indication of how valuable sanctions relief could be. Now, a durable US license could generate up to $8 billion in additional oil revenue per year. But again, that's the optimistic scenario. It assumes the discount largely disappears and Iranian exports return to the peak of around 2.2 million barrels per day of production. And there's another problem. The US can reverse this license. Last month in June, Washington granted permission. 15 days later, it revoked it. Permanent sanctions relief would be much harder to achieve, requiring congressional action and a new UN Security Council resolution. So once again, the value of the concession depends upon whether the political agreement survives. Iran could potentially earn billions more from oil, but it cannot confidently build its long-term economic strategy around revenues that the US may be able to switch on and off. And third point, from where Iran can get its money. Can Iran really make billions in the Strait of Hormuz? This is the most interesting part. Iran has reportedly sought the right to levy fees and tolls on ships passing through this critical waterway, and Tehran's opening demand is enormous. Its reportedly proposed fees equivalent to 5 to 7% of the cargo value. In theory, that could generate anywhere from about $30 to $50 billion every year. But that's almost certainly unrealistic. The proposed rate is dramatically higher than the effective toll rate charged by the Suez Canal. And there is a fundamental legal difference. The Suez Canal is Egyptian territory. It connects mainland Egypt and Africa with the Sinai Peninsula. Hormuz is an international strait with rights of passage. Nobody owns it. So Iran's ability to impose conventional tolls is highly questionable. The US could also prohibit companies from making payments directly to Iran. A more realistic compromise might therefore involve some sort of voluntary contributions to some kind of a management or maintenance mechanism rather than an Iranian toll. Under an optimistic scenario, Tehran might generate around $5 to $10 billion per year. But even that comes with a fascinating contradiction. The more Iran tries to monetize its control of the Strait of Hormuz, the greater the incentive for everyone else to avoid the Hormuz. For instance, Saudi Arabia already has the ability to export some of its oil through a port called Yanbu on the Red Sea. The UAE has pipeline infrastructure terminating at Fujairah just outside the Strait of Hormuz. And after the recent conflict, the wealthy Gulf producers have an even stronger incentive to invest in alternative export routes. So the estimated Hormuz oil flows could potentially halve by 2030 by this bypass capacity as it expands. So Iran faces a paradox. The more valuable it makes control of the Hormuz today, the more investment it encourages in making Hormuz less important tomorrow. And then there's another extraordinary number here as well. Before the war, there's something known as a war risk insurance that ship owners charge to go through the Hormuz. And it was around $50,000 to $150,000 per ship. That has now risen to $7.5 million to $10 million per voyage. Shipping companies are therefore already paying millions because of geopolitical risk associated with the region. Adding Iranian transit charges on top only increases the economic incentive to find alternative routes. So Hormuz undoubtedly gives Tehran geopolitical leverage. Turning that leverage into a sustainable revenue for the foreseeable future is much more difficult. And what about this $300 billion reconstruction fund? This is a number that makes all others look small. In the June Memorandum of Understanding, there was reportedly included the idea of this reconstruction fund for about $300 billion. The key word here is potentially. A $300 billion reconstruction commitment does not mean Iran receives that money. Such a program would require Gulf participation, US approval, and political stability. It would almost certainly be implemented over many years, and every stage would depend upon the wider agreement surviving. Therefore, this reconstruction fund essentially has zero realistic first-year value. So it may be an important headline, but it shouldn't be included when calculating how much cash Iran could realistically obtain in the near term. So now let's look at what Iran could actually get. Let's add it together. In a very favorable first-year scenario, up to around $20 billion from frozen assets, possibly $8 billion in additional annual oil revenue, and perhaps around $5 to $10 billion in some form of Hormuz-related fees and tolls payments. That gets us for roughly around $30 to $40 billion. Now, is that significant? Absolutely. Transformational? Probably not. And certainly nowhere near the hundreds of billions suggested by some of the headline numbers. Most importantly, much of this money remains vulnerable to political reversal. The assets can potentially be frozen again. The oil license can be revoked. Hormuz payments could be blocked, and the reconstruction fund could remain largely theoretical. The real value of any agreement therefore depends on something much harder to quantify, whether the agreement actually lasts. So let's assume this $30 to $40 billion actually goes to Iran. Can it fix Iran's economy? Now, this is where the economic story becomes a political one. Iran badly needs financial relief. Capital flight reached around $27 billion in 2025. The economy is contracting. The government is under significant fiscal pressure. And Iran's published 2026 budget already cuts real spending by around 38%. So additional oil income and access to overseas assets would unquestionably help. It could finance imports. It could ease budgetary pressure. It could provide some support to the currency and government finances, but it would not solve Iran's underlying economic problems. High unemployment would remain, inflation would remain, currency weakness would remain, and corruption would still be rampant. And after years of sanctions, underinvestment, and conflict, this has created a structural economic problem that $30 to $40 billion cannot simply erase. And that's perhaps the most important distinction. A deal could improve the Iranian government's liquidity, without fixing the Iranian economy. That means the political consequences are limited too. The economic grievances that have contributed to the repeated public protests would not disappear. Therefore, the Islamic Republic would likely continue relying heavily on coercion to maintain political control when serious unrest emerges. So, what does all of this tell us? First, please ignore the biggest headline numbers. Iran is not realistically looking at a $100 billion asset release, or $50 billion a year from Hormuz, or even a $300 billion reconstruction check. A more realistic, optimistic estimate is around $30 to $40 billion in first-year economic benefit. That's very optimistic. That's enough to matter, but it's nowhere near enough to compensate Iran for the economic damage of the war. And crucially, much of it isn't guaranteed. As I said before, frozen assets can be refrozen, oil sanctions relief can be withdrawn, and this reconstruction fund remains largely theoretical. And there is also a longer-term irony. Iran's control of the Hormuz may provide significant leverage today, but every disruption and every ship that gets hit by missiles gives Saudi Arabia, the UAE, and the wider energy market another reason to invest in a bypass and reduce dependence on the Strait of Hormuz. So Iran's geopolitical leverage could ultimately encourage the very investments that reduce that leverage over time. And that brings us to the central point. A US-Iran deal could provide Tehran with meaningful economic relief, but relief is not recovery. It would not erase the cost of the conflict. It would not resolve Iran's deeper economic problems. And unless the US and Iran can create a political settlement that actually lasts, even the economic benefits that Tehran does secure could prove temporary. So when assessing the value of any future agreement, the most important question isn't the headline number. It's much simpler. How much can Iran actually bank, and how long can it keep it? Thank you for listening.